Hey everyone, welcome back. Today we're gonna do some rampant speculation and some just like some weird fun stuff that I had my eyes on for the past couple of months. So basically, I think what we're doing now in the stock market is the same thing that we did back over here in January of 2020 before the market crash. So just to explain, there is only one other occasion where something like this has happened before in the S&P 500, where we are having this microphone movement. So basically, we have higher highs, lower lows, and if you draw it out, it looks like not a microphone. Sorry, it looks like a megaphone, right? We've only done this once before, and that is we need the monthly for this. That is back in the inflationary period in the 70s. Sorry, SPY doesn't go back that far. You gotta go to SPX. So this is the only time we've done this before. You can go check yourselves. So between the periods of 1966 to the period of 1982, so basically 16 years, we made this ginormous megaphone during the inflationary period of the 70s. And these gray shaded areas are just the recessions or the official recession periods. So basically, you can see that there was one, two, three of these big drops. And then once we get to this all time high, we drop back. But then we don't go back all the way down. That would reaffirm this megaphone pattern. Instead, we drop down, but we stop not nearly as far. We didn't go nearly as far down as this megaphone trend line would think or expected, and so that broke the megaphone pattern, and we just had this giant bull market. So basically, that's like kind of what I think we're doing here. Um, so the reason why we had to switch over from monthly to weekly is because now everything, the trading is electronic. There's a lot more money, so things happen a lot more quickly. So you can see that we've done pretty much the same thing, right? We've had one, two, and now the third bottom, and now we are reaching new all-time highs. So I think that this time, whenever we do pull back, we're not going to be testing this bottom trend line of the megaphone. We're going to break the megaphone and draw down to maybe, I think, I'm just guessing here, on the 50 weekly moving average, and then we're going to go a bit, and then we're going to have this bull market. So I think we're due for a pullback, but we're going to stop right here. And also, let me show why I think that specifically on the 50. Well, it's mostly because, as you can see on the monthly, now again, this is just rampant speculation. We would go draw down to below like the 200, right? The 200 was here. We went below the 200, and then we kind of saw some sort of support on the 50 and like a higher 200. So if we were to like translate that to the weekly, that's sort of like what we did here, right? We hit the two. Like imagine if this was the monthly chart, right? We from the 70s, we just basically did the same thing right now, but with the weeklies, right? We hit the 200, we got to 200, it went a little bit below it, and then so just like how before on the break of the megaphone pattern, we only went to like the 50, right? I think we could be doing something similar to that, right? I don't like going all the way down here is a bit unrealistic at this point, but I suppose maybe we could hit, this zone, but I think more likely than not, I think just to keep it safe, if we were to correct, we would have a 10% correction over down to, or 12% correction over down over here. And so, okay, let's get back to my other points. So, why I think our current market period, and why I think right now, right at this part of what we've been doing is like pretty much this part right here. So let's get started. So okay. So I just explained the general structure of the megaphone pattern, right? And it seems like if we draw like the top resistance zones of these old like tops of the megaphone pattern, you have this pattern where like it gets respected, right? So this resistance from here to this, and it was pretty significant right here, right? Like once we broke it, we just shot way above, right? There was a little bit of like volatility over here. We weren't really sure, but once we broke above this line and we tested it and bounced off of it, we like did this big move over here. So basically, I'm saying that from here to here is pretty much what we did here to here. So notice it's like a pretty similar pattern, right? Before we break above this line for this top, we had a lot of volatility, and once we break above it, it's a lot more clear. Like we test this line and then we go up, right? So if we were to look at, let's say the peak is over here and this line is this line, you could see that there was a lot of volatility. And once we got above it and we tested this once, twice, three times, four times, then we went up a lot higher with a lot more momentum. So that's reason number one. Reason number two is that if you look at the general structure of what we did after we got above the old resistance lines, is that we would test it, right? And then once we broke the high, we would shoot all the way up to some sort of area, and then we would start testing the 50-day moving average. We would bounce above it. We would create some sort of new high and consolidate around that area, and we broke above to a new zone, and then we rolled over. So here, maybe this would help. Maybe if I went to SPY here, SPY here. So let's look at this to this before the crash. And then let's look at right now to where we did that. Okay, so let's just look at this. So we break above, we broke above. Oh wait, also, notice how this trend line comes from the old tops, right? I could draw a better one here. This one, I would admit, is a bit rusty. So let's start from here. Okay. It's a little off. Okay, well, that's pretty off. Okay, but you get the idea, right? Old peak, line, old peak. This is the line. Okay. That's where we're... Okay. So I'm going to redraw this because this is really ugly. Okay. But, you know, the general idea is that, you know, it's significant here and it's significant there. Okay. So the general idea is that once we broke above this, we dropped below, and then we tested this, and then we went to new all-time highs, right? And so here we tested it once, twice, three times, and then we broke above to new all-time highs. And so this, so you can clearly see also on the megaphone pattern, each cycle from peak to peak takes longer and longer, right? So from here, from this peak to this peak took 236 days, and then this peak to this peak took 512 days. So it kind of like went up by like 90%. So we could expect that this time, if this trend was to continue, it would take around 1,000 days. Well, maybe not 1,000 days, but a lot longer, right? So right now we are at 300 or 529 days. So the same distance from here, we've pretty much matched it, the same distance there. So the point here is that these things take longer and longer. So imagine like this whole thing just gets stretched out way longer, right? It like doubles in size or in length in the time it takes. And so again, we are rampantly speculating. So instead of like just bouncing off here and going directly over, because it takes longer and longer, it took 1, 2, 3, 4 of these little bounces for us to get higher. Right, and you can see that once we did that, once we tested the line and it went above higher, we had a lot of momentum, right? We went from 315 to 333, and let's see, I don't know why there's boxes here. Oh my god. Okay, so once we got above the new all-time high after the testing, we went up pretty much 5% in 34 days, which is like pretty quick, right? This is like the momentum phase of the structure. So after we hit the line a couple times, and then we broke above all-time highs. Notice how we did the same thing. We did like this giant like 7% run in 42 days, right? There was a lot of momentum in this, particularly in this move right here, which is, I'm saying, is the same thing as this zone right here. And so now we could see that now there would be a little bit of volatility testing the 50-day moving average. And so what do we see here? We see us testing the 50-day moving average, struggling, testing it. And and also, since each cycle takes longer, right? Just like how we hit it once here and we hit it once here, now we did it like 3 times, and now we did it like 3 times. So pretty eerily similar. And so basically, once we hit the 50 and then we now are breaking to all-time highs, there was a bit of consolidation, right? In between the resistance, the previous all-time high, we swayed both up and below it a couple times, and then we reached this new higher zone. So when we started doing something like that, right? So before I was like, I was looking at here like, oh my god, we're doing the same thing. But once I saw this great move up without having consolidation at this zone right here, like we did here, I was like, okay, this isn't there yet. I shorted volatility. I thought, I also shorted volatility here, made a bit of money after a couple of mistakes. But now we're doing something similar here. Now we're doing the same thing. We bounced all-time high, and now we're like consolidating a bit where the all-time high used to be. So just look at this, that, see this, it's like that. And now we're going up, consolidating, and now we're up, consolidating, right? And it's also weird because we had really good GDP numbers. We had 6.5% GDP growth. And then to see that, oh, and record-breaking earnings. Like, have you seen the earnings that's been coming out of like Tesla, Google, Apple, all these large companies? They've all been record-breaking. They all beat estimates, like, and Amazon too. The earnings seasons was phenomenal. GDP growth was phenomenal, and yet the day after or the week of earnings, we're down pretty much. So the day after those GDP numbers, were down 0.5% on SPY, and then on the week of these record-breaking earnings, we're flat. So I just think it's pretty ominous. I don't even know if that's the right word. So I think it's like foreshadowing something. So what I can expect is that we could, maybe we don't need to follow this, right? Maybe this is all baloney and this is all a waste of a video. But then if we do follow this in some way, we could see like a new paradigm, not a new paradigm, but we go up to this like 445 zone or whatever, and we just chill about here, right? Like we did over here. And then once we break below this line, or whatever the future is, then I'll say, okay, then I'll take on long volatility positions, because we've been following this pretty similarly, right, as to today. And also, I just wanted to check out the VIX. The VIX is also pretty interesting. This is the volatility index. And the VIX back then is pretty similar to what the heck we're doing now. Like, we see, okay, so basically you get the idea, right? So this is that market crash that happened, right? So we're seeing like, this is the first bounce on the megaphone pattern, this is the second bounce, and this was the third. So notice how we tend to go down to this support zone during this megaphone phase of the market. And whenever we see some sort of higher lows on volatility, that usually coincides with, happens way before this giant volatility spike, which is a giant pullback in the market. So that's kind of what we're doing now. Like, so this line right here was 11. So that's the same line as this. So we're a bit above that. But notice how, like, like over here, you would be flat on the support line and then slowly edge a bit higher, right? And then once we do this little break, or like a little, it's like a little like a teaser of like what volatility could happen. Like right, volatility is going up higher. What this was pretty much this, right? This zone right here when we tested the 50-day. So now we're doing something similar. We have the support zone. We were trending lower, and now we're trending a bit higher after we had a couple little teaser breaks on volatility. So that's another reason why I think we're doing something similar. Like, look at this is 2020, right? This is 2020, January, February. This is now. Look at the S&P 500, right? S&P 500 bounced off the 50, new all-time high, consolidating on the nearly around the all-time high. Volatility is making higher lows. We had like little spikes, but clamped back down. But we never got back down to where it was before. We're like edging above a bit higher on the 50-day on the VIX, just like how what we're doing right now. Where volatility has reached new higher lows, and we're like chilling above the 50-day moving average. I just think that there's a lot of similarities. But once again, like this kind of like technical analysis, when you try to match like something that happened with the past exactly with what's happening now, and like trying to predict the future with it, like the chances of that working out is like really low. That's why this video is just for fun, like rapid speculation. But there are definitely signs. Like we could go back to all the other times right before volatility really hit, like which is meaning the market crashes. Like look at this, right? This used to be the support zone. This is in 2018, and then we got higher lows on volatility, right? Instead of clamming back down to where it usually should be, it was chilling above the 50, which is the blue line, and then we had this volatility shock. Same thing happened over here. Well, I guess this one happened a lot more quickly, but right, this used to be the support, and then volatility came up, and then we didn't come back down. We just like chilled above, and then we went way higher, right? And right. So I'm just saying that there's a lot of similarities. This is just rapid speculation. Who knows? I deposited some more money into my account, like $3,000, just to go long volatility in case something like this plays out in the next month or so. So this is just rapid speculation. Don't take it seriously. Take it all with a grain of salt. I hope you guys enjoyed it, and I'll see you guys next time.